Our view is that we do need to wait for what is announced on the fiscal side. We saw some numbers running around yesterday. We do need to see those confirmed. We need to see also the time frame of those. Is it on a 1-year stimulus? Is it a 3-year stimulus? But still, the backdrop has improved for European stocks. We're seeing the huge demand out of China that should improve. We saw out of the Q2 earnings season some disappointment from the Chinese demand, and that should improve. Also, at a point in time where the ECB is cutting rates, where positioning is quite neutral and where valuations are quite low. So all of that together provides a bit more supportive background for equity markets in Europe. And actually, we've increased our target for 5,300 for the Euro stocks for year end.
I was looking at some of the early movers on the back of the China story. It was clearly luxury, but some of those gains have evaporated now. A lot of that has really been given back for some particular names versus others. On the move this morning, Accor and the hotels part of the world. What do you make in terms of positioning around some of the consumption plays from China specifically? Do you think there's more room to run?
Yeah, I think the first point was in the past there's been some disappointment where the Chinese government has announced some measures but has not been thought through, and there was not a big kind of bazooka type of stimulus. So I think that's what the market is expecting. You want like a broad-based help for the consumer out of China. Positioning is quite light on those names, so you can have like stronger outperformance, but you do need to wait. That is being confirmed that the government is really indeed wanted to move away from the August plenum, where the focus was really much more on a national security, and now where the focus is also towards more the consumer.
Can I just test this narrative a bit? Because I did see a headline in recent weeks saying, look, the Chinese consumer is all shopped out. So even if you do get a consumption stimulus here, does it necessarily go in the usual places? Does the Chinese consumer act differently this time around? I mean, Western consumers do it. Why not the Chinese too?
Yeah. Only time will tell, I guess, but and also what we have to take into account is that the economic transmission mechanism takes some time. So the first is the market reaction. But then for the consumer to see the change in their pocket and their consumption behavior changing, that may take a few months. So you have first the market reaction, but then that needs to be followed through by higher consumption out of the Chinese consumer. But as is still the case, that if they have significant stimulus, we do expect more demand coming for European corporates.
So is the market looking at this wrong then, by assuming that it's really just a play on getting the 5% target growth for this year, whereas actually it could be a long-term play because it could change consumer sentiment and behavior longer term? My big question mark on the other side becomes, well, if you haven't stabilized the property sector, you aren't able to push on that lever as well, and longer term it still doesn't look great either.
Yeah. Well, the way we've looked at it for the European space is that this stimulus is coming at a point in time where we've got other factors that are quite helpful. We've got the ECB that is cutting rates. Also, we've got like the macro background that is troughing. So we do expect that recovery to come and kind of help the equity market. So it's not only one measure that we're seeing. We're seeing kind of the wind turning for the European market that has been an underperformer this year compared to the US markets. Now we say we need to wait until the US election, see the results, but we think that the wind is kind of turning for the European stock markets.